Very good. Danny, let me put you in your rightful place at the top right.
Top corner, as always. Hey, good morning. Welcome back Monday morning to another 0xResearch live stream. It's myself and your fearless leader, Salve Boccaccio, joined by Charlie, FELIX protocol in the HYPERLIQUID ecosystem. HYPERLIQUID. How we doing this morning, guys? Glad to have you on, Charlie.
Thank you, sir. Good to be here.
Are you muted, Bach?
Be the early morning for you, but I'm the
He's
one
back.
that's messing up. Yes, welcome, Charlie. Charlie, I don't know if you want to give an intro. I imagine most people already know who you are because you've already done a pod. But if you want to give a light intro, you're more than welcome to. If you don't want to do it, you can say I don't want to do it.
No, sure. I'll give a light intro. Yeah, good to be here, guys. I'm Charlie. I'm one of the contributors, founders of FELIX. We're building money market infra and more on HYPERLIQUID.
Very good. And FELIX is technically, this is going to be a great segue for me. So FELIX is technically a curator for MORPHO, right?
That's correct. So we took the curation level a bit higher, and then we serve as a curator. Then we also offer a front end, which was the only front end for MORPHO and our vaults on MORPHO and HYPERLIQUID until the MORPHO front end added them about 2 weeks ago, maybe 3 weeks ago. And then we also deploy our markets. So we kind of do the full MORPHO stack, I guess.
That makes sense. What do you so we had, I mean, you know this, Danny also knows this. We discussed this before the show, just so listeners are confused as if like I'm randomly bringing this up. But so there was like the slight issue with MORPHO, with Stream. Like, what is your, I guess, how do you see MORPHO do stuff like this going forward? Like, how does it, like, for example, you guys are great curators, right? And you offer your own front end, and you're also hosted on the MORPHO front end. What is the ideal way that this is set up eventually? Is it like only the MORPHO front end only does like whitelisted curators, you guys, Gauntlet, et cetera, or like very trusted parties? Or how do you see that? How do you see that model change going forward?
Yeah, no, I mean, we can get into the more of this. I mean, I know it's been probably covered ad nauseum at this point, the XUSD incident and the curators allocating to it, but we can get into the specifics of it. However, I think, to your question, Bach, it depends a bit on the level of permissionlessness you want in the MORPHO system, or I guess in DeFi lending at large. If you want anyone to be able to spin up a market and spin up a pool, then arguably there should be no segmentation on the MORPHO side. Now, maybe there's eventually something like a strict list, all list, HYPERLIQUID-esque, where you have anyone can list and it's going on all list, and then you have a strict list, and you have some sort of criteria for that. But then again, that is another level of opacity that ideally we get to avoid. But there's a trade-offs there, obviously. We see that with curators onto these markets. However, the only other piece I'd say is a lot of the curators that lent to this market will probably be on the strict list. And so is that really solving anything? I'm not sure. But yeah, I guess that's my thinking on it is always more open, better, but open to counter arguments.
So the Stream Finance guys would be on the strict list?
I'm saying more so the curators that chose to lend to that market would likely be on the strict list. So for example, I'm not certain, but I believe MEV Capital was implicated in that. I believe RE7 was implicated in that. Like, those are two of the largest curators. And so they would almost certainly be on the strict list. Markets being on the strict list kind could be its own thing. But then again, I don't think that the Morpho team should necessarily be assessing risk of markets. I think that should be on the role of risk managers, aka curators. And so to think like they can't do that themselves seems a bit handholdy to me.
Yeah, I think that makes sense. Also, it would be like more and more responsibility for Morpho if it started also thinking about markets and underwriting risk to markets. I don't think that would be sustainable for them at all. What do you think about like the Aave model where it's just one guy, or like not one guy, but like one team that does all of this?
Right. Yeah, I think that is the great debate. We can steelman the Aave case here, and I guess I'm curious to get your guys' thoughts on it as well. Like in my mind, the steelman for Aave is number one, risk should move more slowly. So there isn't need for these multiple parties and hey, we want to avoid this large governance process because risk is something that should move slowly in the first place, and that's more of a feature than a bug. Second point that I'd steelman for the Aave side is arguably pooling liquidity is all that matters in DeFi lending, or the most important thing that matters. And the pooled model is arguably the most efficient way to do that. You see Morpho trying to get at this with the shared market model, and we can get into that. But as opposed to having segmented vaults, segmented markets, we have segmented vaults, shared markets. So we're trying to pool liquidity, but arguably not as efficiently as the Aave model. And then the third thing that I would steelman for the Aave side is in DeFi borrow lend today, there are really only a few collateral assets that make up the majority of demand. Obviously, we see that on the FELIX side of Hype and K-Hype. Like that is the majority of our collateral base. On the Aave ETH mainnet side, that's ETH, staked ETH, maybe a few other assets. I think like the Athena assets have emerged into that bucket. But yeah, I think like those are kind of the steelman cases for the Aave side, and we can get into the bear cases as well. But I will be curious to get your thoughts too. If you had anything else there.
Yeah, I think that last thing is what really resonates with me. Like, it's really only like 2 to 3 collaterals assets that you want, and I think on Aave it would also be BTC, right? Like, or like wrapped BTC, I guess. And we can talk about like wrapped BTC has its own risks that is associated with, and they keep trying to like change up which one's going to come in. And the issue there is it doesn't move as quickly. Like, I feel like I recognize, like, I don't use WBTC anymore. I use CBBTC. I'm sure it has its own risks. I think the WBTC thing is because of the just-in-time stuff. So I don't know if Aave's adapted to that. I just haven't checked. But like in my mind, the Aave model makes a lot of sense. But like I guess in between the Aave and Morpho thing, where it's not like permissionless curators, but it's like there's a few teams that I trust, like Gauntlet, you guys, and there's a few like risk managers I trust, like Llama Risk. I feel like it's very serious. Our own Blockworks research guys, very good. So like I would trust these guys as opposed to like letting everybody do it. But if you let everybody do it, you get more exotic markets. You get more fun. And then it like who am I to tell people what the issue is that people don't have proper risk management and they don't know how to assess risk. Like the individual consumer doesn't know how to assess risk. And that's also another issue. But that also, when you say that you want more regulation, and it's a whole mess. So I don't know. There's no right answer. I don't think there's any right answer. There's a lot of arguments on Twitter about what the right answer is. Don't think there's a right answer here.
Charlie, what do you think about sort of like information or like disclosure about assets or like how a vault is being managed? Like I guess from my POV, not that I was using any of these vaults, but I have a pretty strong inkling that like if you looked at some of these vaults via like the Morpho front end, for example, it wouldn't tell you enough information for you to have any view that like they were massively at risk due to off-chain activities occurring via the stream finance or other teams that were just like doing crazy looping rehypothecation strategies.
For sure. Yeah, no, I think it's a very fair question. And I guess it sort of gets to at what level you think the risk management should be done, whether it's at the depositor, like Bach, you're saying, basically you're doing your own risk. If you're like, look, I trust these vault managers for this XYZ reason, I'm going to lend to only these guys. Like that's you doing risk versus you just sorting by APY on the Morpho front end and seeing like, oh great, this one has 20%, they've got 5 mil deposited. That's pretty good. I'll go put in 500K into that. Now to Morpho's credit, on the Morpho front end, you can see all the markets that a vault is allocating to. So you can see, okay, great, it's allocated 90% to this thing called XUSD. I'm not sure what this is. And then it's up to you to go determine, do I trust these guys who are allocating to XUSD, or do I trust XUSD myself? I think the issue in my mind is less on the opacity of who Morpho vaults are lending to and more on those collateral assets themselves. I think people, as far as I know, still to this day do not know what the 93 million blow up was on XUSD, who that was. Like almost obviously that should be public information around who is being lent to here, and where are these stables going. If that's not public, like probably no curator should be lending to that. But certainly like there should be information somewhere that's public around that. Maybe the curators who lent to that have it privately and they haven't released it yet. I'm not sure, but yeah, I guess my takeaway would be it's less of a Morpho issue and more of the collateral assets themselves, and the curators that are choosing to lend to those more opaque assets.
Yeah. I was told through the grapevine of Twitter that the 93 mil was the guy who lost a lot of money on 1010. I think he was running some like centralized exchange strategy, and then he lost the money and then tried to revenge trade it back, which seems plausible. I mean, that's what happens to a lot of people. The thing here is like, unironically, a lot of this could be fixed by like if you're able to fully track people's positions fully, like on chain,
right?
Because that is the whole thing, right? Like spot perps, running delta nuclear or like funding rate arbitrages. That's a very viable strategy. It's something a lot of funds do to generate yield, but like there's sizing constraints if you go fully on chain. But I feel like that would have at least been, if that was the reason why the blow up happened, that would have been a way to fix the whole thing.
You're basically saying that there should be no more of this pooling capital on chain to bring off chain. Is kind of what you're getting at.
Yeah. I don't think that makes a lot. But I mean, that's the entire point of how these private credit funds also, or private credit protocols also ran over, right? Like, what was the one? Was it Goldfinch that was like they took in a lot of capital and then they lent it out to these Kenyan motorcycle businesses at like bad rates. Essentially, I think they like at 12%, and it's like like who invests in a startup like with no equity, a ridiculous. You're taking on a ridiculous risk, and you're never going to be able to get your money back. It's the same thing. You're giving out this money to somebody who says they run these strategies, but I mean, if things go south, I don't know how that $93 million hole is filled now, right? Like, how's it remade? You have I don't know how much like legality Morpho has, Stream Finance has to go to this guy and say, there's no like creditors. Like, if you were a depositor and you lost money, how do you get it back? There's no.
Yeah, I mean, there's no getting it back. Like, unless Stream gets the funds back from this guy somehow, or has some sort of lien on his capital, and he has, 93 million sitting around they can take, or they can garnish wages. But yeah, I would consider it basically gone. So yeah.
And you can't underwrite that risk, like, because you don't know what the hell is happening off chain. This isn't Morpho's fault, but it's also not my fault, and it's also kind of Stream Finance's fault, but also not hugely their fault. Like,
no, I mean, it
doesn't work.
I don't know how could it not be their fault that they're going to go lend to someone? Like, it's anytime you're lending to someone, you go assess your collateral risk and your borrower risk, and people do balance sheet reviews and business reviews. Like, that's how lending. So I think there's certainly
fault. It's not Morpho's fault though, and I agree with you on that. I think people, like, my thing was, I was very vocal that I think Morpho should have fixed this somehow, but thinking about it, I don't think they could have fixed it. But I'm more so thinking from like their end, because eventually, if this happens twice, it's fine. If it happens 10 times, then it's like it's a risk to Morpho.
Yeah.
Right. So and it could happen 10 times. There's no reason it couldn't. So Morpho should like implement some way of getting themselves out of trouble if they have to.
Yeah, I would agree with you here, Bach. Like, I don't think this is fundamentally Morpho's fault. I think you have, risk taking on, people wanting to lend their money for 20% APY on their USDC, and then risk taking on these, guys who make a bunch of money and then think that they can go be risk managers when they don't know anything about it. That's probably objectively what happened here on the stream side of things. But for MORPHO, like to your point, MORPHO's issue is that they're kind of in between a rock and a hard place, like classic situation here of, do they want to just leave this thing completely open because that's how it scales the best? Or like the downside there is if 5 or 6 more times things blow up, like are people going to keep using your product?
Yeah, no, I think it's a fair question. I guess the way that I put it, and I think the way that I see MORPHO going is much more. MORPHO is infrastructure to build lending markets and lending products with, as opposed to MORPHO is an app where a bunch of so-called curators list their vaults on this app, and then people go and sort by APY and go deposit into those vaults. And I guess I'm sort of speaking my book here, but that's what we've done on the FELIX side is we've productized MORPHO fully into, like, when people use FELIX, most of them don't know they're using MORPHO and didn't know they were using MORPHO until we got some text this past week like, hey, I heard you guys use MORPHO. Are you guys solvent? I was like, yes, we are solvent. Like, this is not an insolvency situation here. Which obviously, and Buck, we can get into the point around the liquidity crunch as well and what happened there. And sort of the thoughts on that side around like how arguably in the MORPHO system, bad curators can hurt good curators. And so we can talk on that piece, but I don't agree with it. But we can chat on it. But yeah, I think I guess the issue is like, I mean, one could say the same about Bitcoin 2010, 2011, Silk Road, like, hey, yeah, it scales by being permissionless, but it's just used for narcotics trafficking. So if it keeps doing that, should it be shut down? Well, I mean, I think we'd probably argue today, no, it shouldn't be shut down because there's a lot of good that has come from it. I think same thing on the MORPHO side, like if you're an open system, you inevitably have less than savory events in tandem with more savory events, but you have to weigh them. And I think thus far it's weighed immeasurably into the savory side as opposed to just, hey, it's a constant source of terrible collateral being lent to. So I guess that's my overall take on it. But
no, that's a good take.
Yeah.
Another thing here would be like HIP-free if, I don't know, whatever, like they start launching random markets using it and then it just doesn't work or something bad happens.
Right.
And it's like, well, it's not. Like it's tough though, because if you want to play both back end and front end the game, like if you want to be both the back end of something as well as like off your own front end, it's gotta be tough. Like I'm sure Hyperliquid will also struggle with these HIP-free things. I don't know how they're gonna, because they have a strict all thing, which I think MORPHO should also implement a version of that realistically. But like you can always have a risk there as well, like something bad could happen. And you never, I agree with you. You never want to blame back end guys, but
yeah, it's the danger of operating the front end. The blessing and the curse. Like obviously the blessing is the distribution. I mean, Hyperliquid's front end, MORPHO's front end, they have great distribution. The choke point, the bad is that it's a choke point. It's a fail case if something like this happens, and or you eventually centralize control, because there's no truly decentralized front end offering right now. Like people operate front ends, and that is what it is. So yeah, I think there are trades, but Bach, you were coming at me in the DM saying you were gonna come hard at MORPHO. I don't know if I'm here.
No, I'm. This is what I usually do. I get like very, very aggressive, and then I'm like, yeah, I'm actually quite agreeable.
You said I had to.
I think it's fair. No, well, the thing is that when something immediately happens, the first thing that I do is I message people and I say, yeah, dude, this fucking sucks. This is like exactly.
Yeah, he was mad last week.
I was mad last week. Then if you sleep on it, you spend a couple days, you think about it, you're like, oh yeah, this actually makes complete sense. This is fine. I still am not sure if the MORPHO way will win over the Aave way, just because I think like V4 Aave seems to be playing both sides, but like at a very safe space. And I think a lot of lending wants safe. So I don't know about the winner, the overall winner. I might still change my mind, but
maybe I'm looking out too far in the future, but it seems like Aave gets there eventually, all the way over to this like fully modular model, but like given their market share, that they can take the time to go a little slower, a more conservative approach.
yeah. Charlie, what is you're the guy we have the most from the hyper EVM side.
Sure.
What are we waiting for on that side? How's everything going? How's because I saw a few stats that like activity is actually picking up, and so are transactions per second, but it's not where everyone wants it to be. But from what I've seen, it's developing quite well actually.
Yes. Yeah, I think Hyper EVM has had a very interesting life cycle in the life cycle of chains to launch this year. Obviously, the random announcement, February 18, where no one had any idea. Some teams go live, other teams like us, we waited about over a month post to go live. And then just kind of slowly building. It was the alpha phase, and then it's like slowly upgrading the limits on transaction speed is getting upgraded. Things are getting improved. More teams are launching. But then I think now it's in more of a phase where most of the base primitives are built, and people are wondering, all right, well, is this just another chain with the same copy paste protocols, or is there anything unique here? And so in my mind, I think what Hyper EVM is mainly waiting on is more things to do with HIP-3. I think that's really where things go from here. As in, obviously, and we can get into the BLP stuff here briefly too, but obviously the core use case of Hyper EVM was let's find ways to enhance the trader experience on Hypercore. One of those key ways was essentially a multi-asset margin flow where people would come to protocols like FELIX, deposit assets other than USDC, which is the only margin asset on Hypercore. So they would deposit HYPE, KHYPE, UBTC, etc., borrow against those assets, and then transfer to Hypercore and trade. That's been a core use case. The most ideal would be that flow is directly integrated into HYPERLIQUID or Hypercore, and so people can just on the HYPERLIQUID UI take HYPE, put down HYPE collateral, trade against HYPE. That hasn't been doable. So the thinking is with HIP-3, users can launch their own markets. They can eventually integrate this flow directly into markets. And then with the expansion of builder code interfaces, also integrating these markets, also integrating more on the Hyper EVM side, we see more integration directly of Hyper EVM offering into Hypercore trading experience. So that's kind of where I see things going. I think we're like Hyper EVM, HIP-3 is taking its time to really get off the ground. We still only have one market live. Hopefully more soon, but yeah, I think that's kind of where I see it right now. Curious if you guys see otherwise or anything I'm missing on it.
The Hyperliquid to the Hyper EVM to Hypercore like margin, very insta liquidity thing where it's like one button. I don't know how that's going to work. I feel like I'm a bit too stupid for this. In terms of the HIP-3 being the main focus, which I think is what you're implying, I agree with that. I'd like to talk about BLP, but I know everything is a lot of speculation at this point. From what I imagine, they're just going to offer very basic primitives, lending primitives on Hypercore. Probably like the assets that we talked about, where you were like a lot of the assets that make up collateral are these ones, where it's like BTC, ETH, and stablecoins on Ethereum. I think on Hyperliquid, I'm not even sure if they would do KHYPE. I feel like it would mainly be HYPE, maybe USDC. I don't know about BTC or ETH. I don't know if there's enough unit assets on chain to do that, and I don't know how they would even pick the provider. Because from what I understand, there's more and more spot providers coming in as well, right? Like I saw a bunch of AVAX 0 and USDT 0, and I imagine that's layer 0 bridging over through somebody.
Yes. I guess a couple things on that note. So yeah, we can chat more on the BLP collateral. On the spot issuance side, yeah, there have been a couple more teams listing spot assets. I believe the zero assets you've seen, aside from USDT0, which is bridged over from the USDT0 team, I think there's like AVAX 0, Link 0, Aave 0. Those are bridged over, I believe, from a team called Hybridge, which is run by a guy named at MTD, so big Hyperliquid community member. But then, yeah, there have been more of those. I guess, yeah, selecting the assets is interesting. Yeah, in my mind, likely, look, I again, for disclaimer, I'm purely speculating on BLP as well. Have not read any sort of docs on it or no sort of information on what the design looks like, if it actually will be implemented, if it's just something in testing. But I mean, knowing the team, they don't just usually test random stuff. Like, it's probably coming to production and probably in the next 24 hours. No, but we'll see. But I think probably like the main asset would be Hype. I would be surprised if they added third-party assets, given I think a big point of why they would build out a solution, and for context, for anyone who hasn't seen what BLP is, the speculation is that it's Hyperliquid building an internal, essentially multi-asset margin system on the Hypercore side to allow people to trade against non-USDC assets. BLP potentially stands for Borrow Lend Protocol, but really the TBD. So, yeah.
Very imaginative name if that's what they came up with. But
Yeah, I mean, I believe that's what it stands for. I mean, maybe I'm off, but I thought that's what it was. But yeah, I think I would be surprised if they came out and initially had support for basically any asset other than Hype, because I think a major point of them doing this is to avoid third-party smart contract risk. And inevitably, if you're adding assets that aren't just Hype, you're adding in smart contract risk that isn't managed by Hyperliquid Labs or Hyperliquid Foundation, however they have their entity set up. So I think like that's what I would say most likely. Maybe eventually they add other assets, but that's kind of how I would see it to start if it does launch. But we'll see.
Yeah, I think that makes sense. Go ahead, Danny.
Do you think? I guess my question here is like thinking about the Hyperliquid's like kind of growth into different product lines, and just rumors about BLP. Like, I guess, Charlie, are you concerned at all about FELIX continuing to operate or like almost even compete against Hype if they're going to continue to build out new products, into the borrow lend world as well? And maybe that includes like additional products in the future that like compete directly with you in terms of what you offer today.
For sure.
On the IBM side. For sure.
Yeah, I think a few things on it. The first is like just almost inevitably, and again, I don't know what the design implementation details of their solution look like, so I can't say like, oh, compare the solution that we offer versus the solution if it comes to be. But almost inevitably, it would be a smoother experience if you could, instead of having to go to a third-party provider to go borrow against your Hype, you can just use it directly on Hypercore. Like, that would be probably smoother. So I guess we'll have to see what happens there. Obviously, there are questions around pool and liquidity and rates. Are they going to cover, if it's really a borrow solution, are they going to cover the cost to borrow? Is the cost to borrow there going to be more expensive than elsewhere? Questions on that side. So it's certainly things that we're weighing, and we'll have to see, and also see kind of what their solution looks like. If their solution does end up doing something on the EVM side, or if it's purely built on the core side, I guess we'll have to see. But yeah, I mean, I think on our side, our first thing is we are bullish on the growth of Hyperliquid, and so we want what's best for Hyperliquid, because I think that's the clearest benefit, selfishly on our side as a business that's building on Hyperliquid. And so I think we will have to find where our positions lie around that. But we have some other, I guess, cards in the deck as well. So yeah.
Yeah, I don't know how much you can talk about those cards in the deck. Are you open to chat about these, or are we gonna wait and see what Mr. Charlie comes up with over the next few months?
I'll probably see some things very soon. I don't want to speak too soon because we're still ironing out final things, but hopefully in the next week, few days or something like that. So Yeah.
Also, there's a chance that, I mean, FELIX can tap into whatever liquidity there is on Hypercore, right? Like, I imagine they're thinking about that to an extent, or like the
Right.
lending, or that you can arb those away or whatever, borrow lend from there as well to make your users more.
Exactly. Like no, I mean exactly. And I think a benefit here is that ideally this increases borrowing overall and just a demand for borrow lend across Hyperliquid if it does get implemented, which like inevitably as a large borrow lend provider on Hyperliquid is helpful to see. So yeah.
That makes sense. I want to go back to this thing that Danny said. So this idea of the hypercore hosting all financial primitives is, I think, quite sexy if you're a hype holder. Like it's ideal, right? Like it makes everything very simple for us, for the user, and it just like expands the product suite of Hyperliquid to the point that it's just like if it's directly built into the hypercore, it's just much easier. And you said that you guys still have a use case, which I agree with. Plus, I think this gives you the chance to like experiment a bit more, and do sillier stuff, which I think could also be cool. Although probably not what you want to do. I imagine you want to do like more and more assets, and I think you'll have like the spot assets thing. I think makes a lot of sense for you. Like the BTC. I agree with you. I don't imagine they'll take on that risk, at least for the foreseeable future. What do you think about other, like we never saw AMMs do well on Hyper EVM? It makes sense. Like there's a hypercore. You want to trade over there if you want to trade. Do you think like this is kind of a, I guess like overall thoughts, do you think this is a dangerous precedent to set as a team, or do you think this is like overall very good for the ecosystem because you allow the EVM to only be, because in my mind, this only pushes like really good teams to the EVM, where you actually have to offer something unique and cool, to like add on to the entire ecosystem, as opposed to like what we get on other chains, which is a very basic AMM primitive, a very basic of a V1, V2 primitive, et cetera, that's just forked over. What do you think?
Yeah, it's interesting. I think so. The first thing I'd say is I don't know if you've looked at spot volumes recently, but it's actually interesting, and I'm not sure if it's still the case, but for a good while, Project X spot volumes were either almost the same or topping the unit spot volumes on Hypercore. And so maybe that goes to show in some part that the issue is not necessarily an AMM issue, but more so just that Hyperliquid is still known as a perps first venue and not a spot first venue, even though there's discussions around, hey, Hyperliquid can take on Binance, Bybit, any SEX experience. Well, SEXes list loads and loads of spot assets. Hyperliquid, I mean, you can count the number of, non-native spot assets on maybe two hands. Maybe there's a bit more now, but like that's obviously not an at parity experience yet. And so I guess that is something I would say somewhat against the argument that AMM's fully failed. It's just I think spot trading across Hyperliquid has not succeeded yet. But again, the argument could be made back to your point that look, AMMs did fail and will continue to fail because trading on an on-chain order book is just that much more efficient. And so unless you're a very long tail asset that cannot build liquidity on the order book side, the most efficient place to buy or sell this asset will be on the order book. So that is one question there. So I guess I would separate that from the Hyperliquid team building primitives that are not native to the exchange because they started with an exchange. So if you're going to come build an AMM next to, arguably one of the best exchanges, well then, that's kind of on you for building the AMM. But even with that being said, obviously Project S has had some success relative to Hyperliquid Spot. So there's that piece. On the part of them building other primitives in the ecosystem, like I don't know if they were to build up their own liquid staking solution, or something like this. Like, yeah, I think that is it cuts both ways. I mean, because I think the con is, look, obviously they're what, like an 11, 12 person team, and doesn't seem like they're looking to expand rapidly on that. And so you can only do so many things very well. And I think we've seen this in some of the pre-market listings. Granted, pre-market listings across exchanges are notoriously volatile and have these wild wicks that cause terrible UX issues, but it could just be sort of a mass PR campaign against Hyperliquid, why we see more emphasis on Hyperliquid's, flaws on the pre-TGE hyper markets. But I do think there is some validity to the argument that, look, the team is focused on so many things that to think that they also should be continuously launching every new market that comes and trying to parameterize all these markets, and determining everything that goes into launching a market is sort of unsustainable. And so to think that they're also building out every other primitive with this 11-person team is impressive if it works, but likely unrealistic, at least in any sort of short-term time frame, over which time period other teams most likely build traction to a place where it doesn't make sense. If, for example, I mean, Kinetic is obviously something like 1.75 or 2 billion in TVL on the liquid staking side. Like, would it really make sense for Hyperliquid to go launch their own liquid staking solution to go compete with that? It's like, well, no, these guys are a multi-billion-dollar protocol already. Like, why would we bother doing that? So I guess those are kind of the questions I weigh on it. I think there are certain advancements to the Hyperliquid trading experience that it just makes sense for them to build, and BLP could be one of those things. But I don't know if it's necessarily a theme that continues to go. I guess I'm curious to get your guys' thoughts on stuff like the prime broker space around Hyperliquid, if there's something you guys have looked into. Players like Cleara, and I know there's other ones that are coming up like Hyperlink, Quote.xyz, these things. Superstack, I've seen a decent bit of them, but like I think that's another primitive where there's going to be a lot of competition, and arguably it could be something that the Hyperliquid team builds themselves. Like, okay, great, like we have Hyperliquid Prime, and it's just this kind of prime broker experience built on Hyperliquid. We work with, blah, blah, blah. So I don't know, I guess I'm curious to see if that is one that you guys could see, or if there are other primitives you guys see that the Hyperliquid team could in theory step in and create a better UX around.
Yeah, I don't think there's a lot that they could create a better UX around. I think maybe like a liquid staking one would make sense to me, but it's also like, I feel like that, first of all, I invested in Kinetic, and also I love Omnia, and also I love Kinetic. To me, that would be the one that probably makes the most sense, but I also see why they would never want to do it, because I think Hyperliquid already gets some flack because the foundation wallets have a lot of stake, or I guess like the foundation validators have a lot of stake. So I don't know how much more you want to play into that.
Right.
Also, I don't know what the marginal benefit would be if you can just go from one to another, like K-Hype to, depending on however they end up doing it. I don't know if they have to touch that. Prime brokerage makes sense. I chatted with a few people about this, and the smarter people that I know have said that a prime brokerage for Hyperliquid is cool, but like those things really only make a lot of sense if you're integrating multiple venues into one, right? So it's like, I don't know. I need to read more into it. I need to look more into it. I've seen a few pop up. I don't have very strong opinions on any of them. I'm really excited for the spot stuff to work out a bit more. I think one of the main drivers that haven't come in is like Unit is very good at listing assets, but they're only like they're doing the smart thing, which is listing the new asset which will have the most volume, which is the correct approach. But there also needs to be somebody who's listing like old assets that might just want, like, if you want to make it really that venue for all trading, like, oh, they should be on it, ENA should be on it, Penn Spot should be on it. Like, there's a few of these like key pieces, and you could probably make a list of it, and it's like maybe like 40 assets realistically. You can even do it by like checking Binance OKX, Bybit, Spot, looking at like which ones are matched, and like excluding like which ones have including which ones have the most volume, excluding ones that are like obvious kind of scammy stuff. Make a list of like 35 assets and then list those. I think if there is like a spot competitor for unit, I don't know if there, like, I know there are hybrids, etc. If there's one that wants to go like really serious, I would recommend doing something like that. I don't know if that makes sense as a business for somebody to list like old assets that probably don't get traded as much as like whoever lists Mega or Monad day one spot is gonna make multiples more money than whoever lists like those 35 assets over 3 months. So it doesn't make a lot of business. So it's something probably Hyperliquid needs to handle, or it's something that like Unit needs to slowly handle throughout time. Do you know what I mean? Like that's the next thing.
For sure.
If we're talking about trading, I feel like
For
that's
sure.
the thing. There's some spot assets that I would like to buy, but like there's two things holding me back from only using Hyperliquid chain is spot assets on certain things, and the second thing is off ramp. On ramp, off ramp is not particularly useful.
Yep. No, I fully agree. And yeah, just one thing I would say on the spot side as well is I think it's like I agree with the point on the need for more spot assets, and I think potentially one way to solve it is one of these sort of mobile centric, but then also offering a desktop UI builder code app like a Liquid, or maybe Dexari if they end up getting there, or one of these apps that's basically trying to offer like the Coinbase-esque experience, ends up building out a listing function as well, or working with a team that's listing these assets, and there's a collaboration there where, because then you can offer a sex like UX, and own all the trading volume coming from the listing. And so I think that would make a greater business case. So it'd be like Liquid partnering with another lister, or Liquid building out a listing team themselves and listing this. Like I feel like that's probably the way. I don't see Unit going and scrolling, CoinGecko and just listing the top 100 assets, because they probably, to your point, Bach, won't do a fraction of the volume that Mega would do in the first month of trading. So it's just like, is it worth their time, especially since they're doing other stuff now on the equity perp side and other stuff. So yeah, but I do agree that there has to be some sort of way to get parity there.
How effectively does Unit? I just have a question. How effectively does Unit monetize spot volumes for assets they list?
I think they get 50%, which is quite good. Of fees.
Yeah, very effectively. Very effectively.
Of the trading.
They make a lot of money.
Yeah.
But like you said, the volume here is negligible on a lot of these assets, right? Like I'm just going down the list, and Fartcoin did like 2 million in volume.
Yeah, but like, sorry, you speak.
No, you go ahead.
But like, I'm trying to figure out which one. I mean, there was a few of these that did a very, very good volume, especially on like day of launch, right? Like Imagine Pump, day of launch, it was the most, Hyperliquid had the most volume across decentralized exchanges, or like the most like single venue volume across decentralized exchanges. Same with like, what's another big one? XPL.
Yep.
Yeah.
Big.
It's like, and that's the thing. It's like you said, it's negligible. Like Fartcoin does 2 million volume a day, and that was like a big listing at the time. But now it's almost it. I don't know. The thing is, I don't know about the economics from Unit side at all. Like I don't know how much they have to pay for these listings. I don't know how much it costs for them to run the infrastructure for those listings. I don't know what they have to do on their end, legal side, business side. So I can't figure out what it would make sense for them. It could be interesting for USDH to try and do some of this stuff. I was just thinking about it, like, because it's going to be tough for them to compete with USDC in the markets. So it might make sense for them to compete in the spot markets, or I think this is what they're working towards. It seems to me like it. Like on ramp, off ramp, maybe offering like a very good UI for that. That could be a great way to boost USDH volumes, and you can clip 1% or whatever on like off ramps. Like I would pay 1% to be able to off ramp very easily. Maybe not 1% fully. That seems like a bit much, but
sure.
You know.
Yeah, I guess the thinking I had, like the line of thought here is like knowing that the fees on these are a few bips, and if you're going to list something and it's only going to do $1 million in volume a day, like, and I guess then you get 50% of the fees of those bips. It doesn't seem super meaningful. But to Charlie's point, which I think you mentioned, is like if you have one of these like other kind of like front end providers who's maybe taking a larger take rate because they're providing some kind of like wholly integrated service to their customer who's willing to pay more in fees, like doesn't care. You look at like an Axiom or something like that, or a Ravi or a Phantom that's going to charge an additional take rate on top. Like maybe they can flywheel that into, hey, we're charging like 0.5% actually on all these spot trades. So, if the users want to see Aave or Uni or Bitcoin Cash on spot, like we could list it because we know we're going to, even if it's only going to trade $1 million a day, like we're going to make way more money than anyone would have made just natively listing it on the exchange.
Exactly. Yeah, exactly. And I guess the only other piece that I would add on the unit economic side is, I don't know, Dan, if you remember like the days like back in the summer when there was that large BTC whale who was selling like hundreds of millions on Hyperliquid, like I think they were doing something like $1 million a day in fees there. And so like obviously then like you have these days when you're ideally you keep having these days when like as the BTC lister, like they're just printing off those. And so it makes up for the days when another asset is doing $1 million in volume and they're not making much. So yeah, I mean, having the biggest assets is always the path to large scale.
Yeah, but I also think this is the economics of every exchange, right? Like Binance has whatever, like 600 spot assets or something, and it's I can't imagine like the bottom 80% does any volume whatsoever, but they monetize it by
they monetize natively from those teams by having them pay them
natively
from supply.
And that's something that Unit obviously doesn't want to do because that's like what Hyperliquid's supposed to avoid. But maybe there's a way to align the incentives a bit where teams can put up something to, I don't know. It's like it's also not the benefit. Hyperliquid needs to get big enough such that teams want to seek listing, and then it changes. Like the spot side needs to get big enough. For the time being, I'm not sure how it's going to work out. But those are my two things: like spot markets, more spot markets, and onboarding, offboarding.
Yep.
I guess I want to go back to something I was thinking about that we didn't touch on, was this idea of like what other products they could build or offer. And I think to me, there's almost a question of like you could compare some different models here. Like if you're thinking maybe from like a Robinhood perspective, they're not necessarily building every product they offer, right? Like they've partnered with Kalshi for prediction markets. So I think when you look at Hyperliquid, there's a question here. And then I guess you could look at Coinbase as well. They recently acquired Echo from Kobe. So there's sort of like some different models to go about this. You could build it, you could acquire it, you could partner with someone and charge an additional fee on top to monetize it. I don't know if you think the Hyperliquid team, like just in their action so far, size of their team, like their views on how they've built the product today, like if that makes you think that any new product, they're just going to build it just because, or is there an angle here? Like if they want to get into prediction markets, do they just call up Polymarket and get a, slap it in and charge a fee on top?
Right. Yeah, it's interesting. I think Hyperliquid is in a unique spot relative to Coinbase or Robinhood, Kalshi, any businesses, because obviously it's trying to be more than just an exchange provider. It's trying to be this sort of this infra layer. I mean, Hyperliquid is trying to be more akin to Bitcoin than it is to Coinbase, in my mind, which is an open layer. So, and because of that, you lose the flexibility with some of these more business-esque partnerships, where it's like, if you make a big part of this working reliant on another party, well, then you inherently lose some of the, I guess, nativity, the naturalness of this one thing, which is Hyperliquid, when it's relying on Coinbase for this thing or Kalshi for this thing or Polymarket. Like it's losing something there. I think that's a big question with Unit, because essentially Hyperliquid did partner with Unit to do spot listing. Like that does seem like you could make the argument you could make the argument that it was permissionless and clearly Unit walked in. You could also make the argument that look, why wouldn't they just list Bitcoin themselves? It's sort of like there was a, and I'm sure partnership is not the term that they'd want me to use, and it's probably not the proper term, but you can see how it'd be like, oh, they partner with this team to do the spot listings. Like it's pretty straightforward. So I guess like, and that's a question on that side. So, or saying like, oh, they partnered with this team to do the native stablecoin, native markets,
USDH.
right? So like, but then again, it's not necessarily like Hyperliquid Labs when it like signed an agreement. It was like a full, like a governance process that went into it, the selection and all this stuff. So I guess those are kind of different dynamics at play. So I guess circling to your question, Danny, like in my mind, they likely do not do any sort of partnership unless it's like, hey, we're hosting sort of a, come win this opportunity to list these Hyperliquid perp markets or Hyperliquid prediction markets. And if you want to come list, you can put a bid in and there'll be some sort of governance vote. And this thing, I mean, maybe that could happen, but I'm just hesitant to see that they wouldn't want to engage in any sort of business deal, transaction stuff, especially a bit after a bit of, I would say USDH, like it was fine getting the ticket proposal, but it was definitely a bit of like, oh, there's all this backdoor stuff and all these rumors around like, hey, it's a cabal, and all these things, and I'm sure that obviously just not something that they want to deal with. So, yeah,
I think there's an interesting dynamic here. Just to add one more point, is like you had a lot of teams who were willing to quite literally throw money at Hyperliquid that obviously did not win, and so like maybe I don't know. This isn't really like pushback, but more so just like if a prediction market kind of proposal were to be on the table and it was, put in your bids, put in your proposals, put in your offers for what that kind of arrangement or integration looks like for Hyperliquid. I do wonder if it makes sense to put this in front of the public versus to have like the team, for example, just, take bids from three parties and say, okay, clearly we're going to go with Polymarket because of their brand, and two, they're offering us $100 million or something, right? Like versus let it go to public and then somebody picks, make up a name, XYZ markets, and it's like an unknown thing, but the favorite of the crowd, so to speak.
This stuff is. I was
because you want Hyperliquid to win, right? Fundamentally, like you want them to win. If you're bullish hype in Hyperliquid, then you want them to take the best proposal, but there's maybe an argument that they may not be taking the best proposal.
I was listening to this Kobe Up Only episode, like the one where it's just Ledger and Code. It's like 3 hours long, and the last 40 minutes they just talk about DAOs and decentralization. And it was crazy to me because this is in 2021 when like DAOs are very, very big, and we still have the same thing. And I would say like that USDH thing was, and I think we have this with the HIP5 thing as well. And I'd love to get your thoughts on this, Charlie. But like,
sure,
like they specifically outlined the HIP5 thing in 2021, where they're like, well, there's a lot of like short-term thinking participants who are like down on something and they want to make money on it, versus like the long-term aligned. And the same argument you could have made for USDH, and the same argument you could have made for like this prediction markets thing is like the team clearly would know what is the best for the long-term thing. And if you don't agree with their long-term thoughts, you can sell the token and buy it back when you believe that it's going to get better again, or you can just not buy it at all. But like in crypto, there's no like, the moment that you let everybody have an opinion about something, the opinion is useless because everybody has a shit opinion most of the time, like the general public, and you're just letting them speak about those things that they have no fucking idea about. And this isn't like any disrespect to the HIP5 guys. I read over the proposal. I disagree with it fundamentally. I don't think it's a good idea. But it was really ironic. And we have a guy who was very big into Cosmos back in the day, Effort Capital, and he was talking about it as well. And he was like, this is why like governance is the worst thing that can happen to a crypto protocol, because it literally is like you want as little governance as possible at all times, where the team just leads thoughts and like leads the space, and then investors can make their own decisions based on where everything is going. That was a lot of rambling, but Charlie, maybe just any takes in general on the whole thing, but like would love to also hear what you think about HIP5.
For sure. Well, I'd say a few things. Number one, going back to Danny, a point you made before around them not selecting the best proposal. I think that's fair. However, I do think there's multiple arguments to what is the best proposal. And I think a lot of people were arguing that, yeah, look, even though Paxos is offering this way to, basically onboard Hype onto Venmo and Hype onto PayPal, and it's going to buy hundreds of millions of Hype or whatever it was going to do, that was short term, and that in the long term you wanted a team that was only focused on Hyperliquid, and so that was basically people were pricing the value of that versus the value of the immediate Venmo Hype listing. So I think that's a fair argument. Like I think you could obviously argue either way on it, but I would just say like I don't fully agree with the framing that the best proposal was just the one that was going to buy the most Hype in the moment. So maybe there's that piece, but and then I guess back to your point on the governance side. Yeah, I mean, governance is decentralized governance is still a disaster. Like it's all over the place. But the one piece where I'd push back on the Kobe point is like to say that there should be no governance. It's difficult because you walk into like you're either basically at the Bitcoin side where there's certainly governance, but it's basically autonomous, or you walk into just it's a centralized org, and like that's obviously what we're trying to avoid here. And obviously that not only are we trying to avoid that, but then that also likely runs into large regulatory issues, and it eventually is shut down a couple of years into the game if it gets any sort of scale. And so I think there's two issues on that side, and why even though governance is fundamentally not where it needs to be, it's still the direction that I feel we have to continue to go. And like things like delegates have made that a better experience, onboarded risk curators, things like this have made governance more suitable than just everyone's firing in a vote. But sure, it's still like unideal. Like I would say on the Hype governance side, I'm really in any sort of like total governance. Like anyone can say have a voice. Like I think that's one of the great things about Twitter and these platforms is like anyone can say something, but really the voters were the validators. And yes, you could move your stake, and so you could effectively cast your vote differently that way. But the real person saying native markets or Paxos or Athena or Sky was the validator. And so I think there's like a piece there where it's less of just like pure chaos of everyone's like firing votes. But so I do think that's kind of where we go a bit, but I don't know. I rambled a bit there as well. So I guess I know you guys do a fair bit in the governance space, but do you think governance is like a pure waste, or where do we take governance from here? Maybe we need another hour or something, but yeah.
I think like I honestly believe like the Aave method of listing and delisting markets is probably the best way. It's like 3 to 4 risk providers who have like clear idea of how things should work. Maybe not the Aave example because I think the internal guys have a lot more power. But like let's say it's like I don't want everybody to have an opinion because a lot of people just don't know what they want to talk about, and they're very focused on a short-term thing. I think the validator way of doing it is probably correct. I think Hyperliquid validators are also like a relatively good bunch in that it's not like a lot of like traditional consultancy style of businesses. It's more like money managers or like people who are like relatively smart and who want to see Hyperliquid succeed. So I think that is a good way of doing it. I think it shouldn't be more than like 40, 50 people if you're going to do a governance. Like a council style of governance or like a board. A board is the best way to put it probably.
Right.
Of governance makes a lot of sense. I still wouldn't give too much weight to people's thoughts because I really like if I held like let's say the HIP5 proposal was about what's that like Jeff 800 per etc. And it was just those 4 assets, and the proposal was like we need to boost meme activity, therefore we need to ship it into these memes. If I held those tokens, I would be like, fuck yeah, this is the best proposal ever. Like they're gonna ship whatever $50 million a day, no, $50 million a year into these tokens that have like 10K volume a day. I'm gonna make so much fucking money. And it can immediately get front ran as well. Like to me, that would have been the perfect proposal, but obviously it's not the right choice. So I think it needs to be. I think Hyperliquid also has a benefit in that now it's set the stage that validators pick votes, and you have to like move from one to another, so they have a good system. I just don't think like very mass, broad decentralization with governance votes going that way has worked out yet.
Right.
I just don't think people consider the long-term effects enough. It's the same
Right.
reason why if I hold Tesla stock, I can't really vote on anything, can I? Like I'm just like,
You could have voted to approve Elon Musk's $1 trillion pay package.
That's correct.
But here, my viewpoint would be that I think like governance in crypto has just been historically too in the weeds. Like I agree with your point, Bach. We should like shareholders or token holders, they don't need to vote on every action. Like, yeah, typically you have people who run the company, and then there's maybe a few key issues like you vote to approve a new board, or you vote for, maybe there's a large merger acquisition or something, and maybe you'll get the shareholders involved for that, as it's maybe meaningful to the business direction and their, predict future estimation of the stock price's value. But we shouldn't be voting on like, every single action or proposal every other week. There is kind of a caveat here though, that like if the validators are sort of quote unquote the board, you kind of have like this weird conflict of interest if there's like a business model in essence to, offer like staking services, and then that kind of influences token holders to push all their voting decisions over to a particular validator or therefore board member. So there's kind of like we have some weird cross currents just due to what proof of stake is.
If FINA did this, I think in their initial proposal they had Charlie, maybe I don't know if you remember it, so just correct me if I'm wrong, but in their initial proposal they had like, if a validator votes for us, we'll give them boosted yield. If they don't vote for us, we won't give them the boosted yield. And then they had to remove it because I think they felt good about it.
Bribing?
Yeah, like openly bribing, which is also like technically the right way to approach that thing to win the vote. And it's good that they removed it. Last thing I'm going to say, Danny, completely agree with you. If a validator vote went forth to like increase emission rate, and like because your commissions immediately increase the amount of money that you make, it's completely wrong. We saw this with Chorus 1 and Near. I don't know if you guys know about this, but Near like halved their emission rate because it was like 13% or something, and Chorus 1 was like, "Oh, this fucking sucks. This is the worst way." It's like, yeah, obviously you fucking ate it. You make like $1 million off it a year. Charlie,
yeah.
Go ahead.
No, I unfortunately have to hop soon, but I have one more thing I'd like to get your guys' thoughts on regarding it ties in with the HIP-3 stuff too, Buck. But do you guys think, or is there not an argument to be made that not holding other assets, but should the assistance fund not be accumulating USDC as well, and not just buying hype? I guess the reason I say this, and not to be anti my own bags or probably my own bags, but I do think if the point of the assistance fund is to help in a worst case scenario, well, in that worst case scenario, if you're only sitting on hype, inevitably you're going to be liquidating hype into an already down hype, and arguably that could be very bad, just across the board. So I don't know. I'm curious to hear, like, sort of tying in with the HIP-5 stuff. Like, is not an argument where it's just like, no, we're not going to be accumulating other random assets, but we are just going to be accumulating a balance of either USDC or USDH, which is also buying back hype. So it's like, look, now instead of just sitting on hype, we have a large stack of hype and then also 200 million USDH. Like, I feel like that would be a pretty nice buffer. But I don't know. I'm curious to get your guys' thoughts on that.
Yeah, I think that makes sense. I think the main reason people don't, this is speculation, but in my mind, the Hyperliquid team set the assistance fund with that mandate because they wanted to have an explicit link to the token value accrual while also having a way to cover their ass if somebody knocked on their door and said, hey, buddy, you're shipping $600 million a year into this token. This implies revenue, and therefore it's a security. I think that was the reason why they did that. But I agree with you. I think ideally, let's say HLP is now at 1%, like fees going to the HLP is 1%. I think there's no problem if Hype reduces it to 95% and spends 4% on USDC, but it would have to say explicitly, like, we are only buying stable coins and nothing else, because you also don't want to prop up other protocols. Because then one of the reasons I didn't like HIP5 was because it's a bad feedback loop. If you're buying the token of, I want to say one that I don't like, but there's whatever, like let's say some random AMM which has failed. It just does no volumes, it makes no money, it's a ship product, but you're buying the token of it to prop up this like we need to support the hyper EVM, whatever. It's horrible, because like the founder is still winning, the investors are still winning, but the product is deteriorating. It's a shit product. So I don't think you want to prop up others, because then you never get like the good tokens being bought back. But I agree with you. I think they should have a bit of a buffer in terms of USDC. USDH probably makes more sense here because it's the like native stablecoin. But people will vote against that if that happens. Like that's the ideal way to do it. But then when it goes to vote, people will say, well, why did we not buy HIP5 but we're buying stablecoins? Stablecoins aren't good for my bags. HIP5 would have been great for my bags.
Yeah, I think this is the case for a good unilateral decision by the Hyperliquid team to say that 5% is going to go into stablecoins as a backstop.
Or me, Jeff, I will make all of the decisions for you.
Yeah, send it to Bach.
Measly sum. Right.
Sounds like we have to draft a HIP6 or so.
He'll lose 90 million rage trading off chain, and the users won't know about it.
Yeah, I will not do that. Charlie, I know you have to go. I appreciate you taking the time on a tight schedule to chat with us.
No worries.
Anything you want to say to the listeners and to our live stream and our podcast listeners after this goes live? Anything you want to share with them to do?
Nothing. Just go watch 0xResearch, the best podcast in the world. So thank you guys again.
Thank you. All right.
Yep.
Danny, want to pull us out?
Yeah, I realized I
just realized that as well.
Realized I need to say some things about a very special party, a very special sponsor of ours, Katana. This episode is sponsored and was sponsored by Katana. Katana is an L2 built for DeFi and is pioneering the ecosystem category of productive CVL, believing that change should be graded on how efficiently assets are put to work in DeFi rather than just total value locked. From now until the end of November, users that bridge to Katana can earn boosted yield from CAT incentive campaigns, added vault bridge yield, and other chain revenue. Follow the link in today's show notes to get started. Why can't? Oh, you took yourself off the screen.
So funny that we both left. Charlie's off stage now. Charlie, you can. Thank you for coming on.
Yeah, Charlie, thanks for coming on.
You are.
You're free to leave. We have a contractual obligation to fulfill here that we need to spend at least a few more minutes on stream for. Actually, there's something I want to get your take on that is being talked since we have maybe a few minutes here. There's some chatter around the Mega ETH sale around, if users go on Twitter and say they're gonna OTC their ICO allocation, then they'll be withdrawn from the sale. I guess Namek tweeted about ICO Beast. Basically, I didn't even read ICO Beast tweets, but I guess he was tweeting about something about OTCing his allocation for the free money or whatever. And then the team pretty much quickly came out and said, anyone that does this just gets removed because we have your socials linked. I think it makes sense from the team, but it's interesting. We've not really seen this type of action before. They're kind of setting a new precedent, I guess I would say. Like we've seen it for Sybils, right? Like I forget what team it was, like Layer Zero maybe, that went absolutely crazy on their like Sybil hunt to seek out and like remove as many Sybil addresses as possible from their airdrop. I think this is the first case of like, we know that you guys are doing deals like on these sales before they even launch the token, and we're gonna like weed you out if we can.
I mean, this makes perfect sense, especially for someone like ICO Beast who got full allocation and is tweeting about how like there's a million people who wanted this full allocation. There's a million people who wanted more allocation than they got, and you're out there tweeting about how you want to sell it. There's just a way to do these things. Also, it's a horrible look on the team. Like they already faced issues with giving Cook. I don't know how to pronounce
Capital.
it. Like they gave him a lot of allocation. People are really upset about it.
Yeah.
You don't want to give people who are immediately like you might want to sell. For some people, it is their like duty to themselves, not a fiduciary duty. It's like if you got the full allocation, some people have to sell a bit, right? Like maybe you don't have any money and you just made some money. Maybe there's like something with your family that's going on, whatever. Like you have to sell, okay? You shouldn't be saying it out loud. Like there's if a team is giving you a 4x, you shouldn't go about it on Twitter and boast and say, oh yeah, I made $1 million. I'm selling right now. Fuck you. Like it's not a good look. It's a horrible look for the team, and the team is saving their ass. And I think it's completely fair that they're saving their ass. Yes, it doesn't look great if it's like, but also this isn't a decentralized sale. This is a sale through Sonar, which is Echo, which you have to submit KYC. You can't whine about it if your allocation is taken out. I think it's fine. I would be upset if it happened to me for sure. I have a loud mouth as well. I know like I would have made this mistake even if I wasn't selling, which I'm not selling. I'm gonna go out and say I'm not selling. I'm not selling my allocation.
Brad, this guy.
I'm giving an example. Is like if I wasn't selling, I have a loud mouth. I would have made a joke about it. Haha, thanks for the free 4x. I OTC that or something like that. You shouldn't do it. It's a horrible look for the team because people will screenshot it and say, look at what you did. Or like, look, like Mega ETH is being, it's the same as having a Sybil. It's a horrible look. It's somebody who's immediately dumping, especially something called a conviction round. We can argue if the name is the right name or not. I would have liked the Mega Sale or something like that.
Yeah. You know, they'll never be able to get rid of OTCing this, but you can at least weed out the kind of like loud bad actors, I guess, in this case. And that's kind of free for them to do considering how oversubscribed it was. I agree with you on that point, 100%. It's funny. It reminds me of that. I forget what Soul token it was that had the little KOL checklist. Like you agree to sell.
I own it.
Is that what it was? Yeah, you agree to sell in like a
respectfully. I think it was I own it. I'm not sure. I
don't remember which token this was exactly, but they had the funny checklist before. You know, I don't know if Echo needs to add the checklist. Say, you know, I will not OTC my bags. There's no way to check. So, but I guess just a bit funny that's coming up on the timeline today. I agree that there was I saw some back and forth around Cook Capital as well. Just like, I don't know, these accounts that I think people know are like shillers for tokens and get paid by, you know, memes and other token projects to basically just like drop them on their timeline.
I will say I really like the Mega ETH team. I like what they're building. I think it's super interesting. I like the people that work there individually as well. Like I'm in a unique position in that I've met through podcasts or through like video calls, some of them because I wanted to have them on the podcast. I had like Lay on a panel. Always have been super kind, always very smart, very sharp. Brad's a great guy. I will say the Cook decision does make me a little bit like, you know, is this it? Like, is this the right thing? I think you should give him Allo. I don't know if I would have fought to death about, but also like, it's not really their fault. Like,
I don't think they needed to respond to it.
Yeah, I don't think they should have.
I think Bread took an L by even responding. Is my viewpoint. Like I think like they define the terms of who got allocated, and so it's like it doesn't surprise me that an account like Cook would get an allocation, especially after choosing the lockup. It's like we know this guy is farming shit on chain with a ton of money. There's a bunch of accounts like that, and even if they are like token shillers on Twitter or whatever, it's like it doesn't surprise me that they're gonna qualify for like the max tier. I think that's kind of expected based on the criteria they laid out. I think they took the L by going to Twitter and like getting in the. You just don't need to. I don't know. I think more teams probably needed to learn social media. Like I don't know. Everything you do is marketing, and so like you don't always need to respond to criticism. You can just let it exist.
Yeah, especially since crypto is uniquely, because it's so internet native. Like on the internet, things don't last very long anymore. It lasts like 3 days max. Controversies, so you could have ignored it.
Yeah,
I've just forgotten about it. It's tough. Like
I will say on the flip side, like no one's going to care in 3 days as well. The fact that he responded, so it really doesn't matter. But I don't know.
Really don't think
maybe people are mad in Bread's replies for a while. I'm not really sure.
Okay.
All right.
Are we good?
Before we call it for the day, I have to one last time give a shout out to today's sponsor, Katana. Thank you, Katana, so much for sponsoring the stream today. Katana is an L2 built for DeFi and is pioneering the ecosystem category of productive TVL. In just 2 months, Katana has surpassed 500 million TVL, with over 90% of that TVL being productive in ecosystem apps like Sushi and Morpho. From now until the end of November, users at Bridge Katana can earn boosted yield from CAT incentive campaigns, added vault bridge yield, and other chain revenues. Follow the link in today's show notes to get started. Thank you so much to Katana.
Last up, I gotta say a few things. We have, we don't have a lot of listeners right now because it's very early. But I will say tomorrow we have a very exciting stream happening with the Harmonic guys who just raised from Paradigm, or just announced their raise from Paradigm Block Builders. And on Friday or next Monday, we have Project Zero, McBrennan, coming to chat. So if you are a 0xResearch listener, this is your time, man. You are having the time of your life, and so are me and Danny. So we're gonna, if you have any questions for either of those teams, just let us know. You should be in the 0x. I can't imagine any of the people listening right now aren't in the 0xResearch Telegram channel. But if you aren't, make sure to join it and let us know if you have any specific questions. If it's approved by large stakeholders, we will ask the questions. And apart from that, we'll do our regular stream on Friday as well. So make sure to be on 11 a.m. Eastern. As always, today was a bit early because we wanted to accommodate for Charlie. I wanted to hear what he thinks about everything. But it was a good stream. So, Danny, how do we end this? Are we good?
Yeah, shout out to Charlie for coming on, making things work. It was a great conversation, actually. I was so enthralled that I forgot to do my ad reads during the show. Yeah, we'll call it there. Look Danny forward to what were you saying?
Very rare for Danny to forget to do the ad reads because he loves doing them so much.
Yeah, I love our sponsors so much. So what can I say? Yeah, look forward to Harmonic tomorrow chat and a regular live stream on Friday. Do we have,
I think that's it. We might start doing,
do we have any exciting guests for Friday? I'm not sure if I don't know if I probably will not be on the episodes tomorrow and Friday, unfortunately, chat.
We do have a very exciting guest for Friday, actually. We have McBrennan on Friday, and we also have something that I can't share yet. I just realized.
Ooh.
So I won't be sharing it, but it will be cool and exciting. So we should all look forward to that.
All right. Tomorrow and Friday, chat. Tune in. 0xResearch live. We'll be here. Peace. All right. Thanks so much. See you guys. Peace. Why are these broken?